What's up, guys? Welcome back to Roensch Capital Charts. In this video, we're going to be taking a deep dive look at Rivian stock, ticker symbol RIVN, on a variety of time frames with the intent of pulling out as much possible bias as we can out of the 4 hour, the daily, the weekly, and then in addition to that, the volume profile and some kind of like hidden data in the options chain. We'll also take a look at levels that I think we're going to see perhaps some elevated volume, a lot of trading happening around to really make sure we're as prepared as possible for the entirety of April 2024. So let's get started here with the 4 hour chart, which is, I think, the most zoomed in time frame that is still contextual for a month-to-month look. Really quick, guys, listen, if you have not done so already, I'd greatly appreciate it if you subscribe to the channel. My goal here is to hit 10K by the end of April, and I think we can make that happen with your help. Appreciate you jumping aboard. Let's dive in. Now, you'll notice here on the 4 hour chart, my 4 hour is very basic. Most of my charts are incredibly basic. All I'm interested in are these self-fulfilling prophecy psychological indicators. That's all I care about. Okay? The rest of it doesn't have enough eyeballs for me. So I have that white line, which is the 50 period moving average, and that gray line, the 200 period moving average. Looking ahead through April of this year, here on Rivian, guys, I really think that 50 period on the 4 hour is going to be in play. It's very interesting because we had so much volume on this recent pop in early March that we completely reversed course of the 50 period, allowing it to remain in this temporary uptrend while the stock then faded and now kind of consolidates here, at least at the time of the recording of this video. The stock, it's very likely that the chart looks different by the time you're getting around to this video. Listen, that's okay. The way I approach these monthly analysis videos is to ensure that whether you're watching this before April starts or at the end of April, everything here is still relevant. And I would argue if you're watching this even later, you're actually at an advantage because you're able to see how, a few weeks after the fact actually played out and whether or not the bulls or the bears got their more favorable scenario heading deeper and deeper into the month. Now, notice how that 50 period is currently sitting right below 12 bucks a share bulls. Here's what I'm looking for through April. I would love to see that 50 period get above 12 bucks a share. But really what I have my eye on, specifically on the 4 hour for Rivian, is to see a high volume upside break back through the 50 period like we saw here in early March. But ideally, I would like to actually see a low volume retest if we're able to make that happen, and then a high volume confirmation. Basically saying, in the short to midterm that, listen, hey, we're claiming this 50 period here as a support level on the 4 hour chart. In doing so, and that's not a massive move. That's a few percent with Rivian currently in the mid 11s. Okay. But that potentially sets us up for a move up toward that highly crucial level on the 4 hour, which is the 200 period. Understand though, that's nearly 19% upside away at this point in time. The 200 period is moving lower though, so that is likely to become less of a needed move over the course of April if we continue to see that 200 period downtrend, rather than reversing course, which I think is probable that we continue to see that 200 period trending downside since it is slow to react. That's not a bad thing. Now listen, bears, for you guys here on the 4 hour chart, two things. Any upside tests that we see of this 50 period moving average, you bears are going to want to see as high volume rejections as possible, but not only that, you guys would ideally like to see this 50 period flatten out even more and then turn back downside, dragging the stock lower with it, creating a close psychological barrier back to the upside with a downtrending stock. Of course, if you're a bear, that's what you would prefer. Now, I think it's really important. Let's take a look at the daily, because this is where the technical and psychological levels really come into play. Now, for those of you who maybe are just a little bit earlier in your journey here in TA, first of all, I believe this is nothing more, nothing less than a self-fulfilling prophecy, and that's the way that I like it. It provides the ability to gain edge. And that being the case, technical levels will very often become psychological levels, and vice versa. But since this recent earnings report, since we're now down in kind of uncharted territory, we should take a look at this from a more zoomed in perspective, at least here on the daily. Keep in mind, that 50-day has curled downside and is trending lower. Bears, you guys would love to see that continue. You know, maybe by the end of April, if you're a bear, you wouldn't mind seeing that 50-day here on the daily chart getting down below 13, maybe even $12 a share. That'd be a great thing to see if you're a bear. You're getting that lower psychological potential resistance that a lot of eyeballs, you know, there's a lot of people looking at the daily chart with the 50-day moving average. That's like the most basic setup you could possibly utilize. Therefore, bulls, you guys wouldn't mind seeing a flattening out of that 50-day, of course, on the daily chart, just to avoid it kind of claiming any more downside territory. But look, a couple of really clear levels that I'm paying close attention to throughout the month. Listen, $10 a share is a psychological level. We haven't really seen it prove itself too much as a technical level, just maybe, you know, once, maybe twice if you want to count back-to-back days. But listen, the truth is we know that 10 is likely to act as a psychological area, just because it's a clean round number, right? Obviously, that 1055 region, you know, it's never an exact penny, right? It's always going to be a range. That area is clearly a technical level, and those tend to turn into psychological levels as time goes on, right? So I am paying close attention to that 1050 to 1060 region. Now, Rivian's actually making it really easy for us because it's these round numbers. 11 is also very much so an area of interest, not only psychologically speaking, but in a technical way as well. It's that round number becoming a technical level, which is very common on the lower price stocks like a Rivian, $11. Now, that being the case, okay, what I can do without jumping the gun is look up and say, okay, I expect 12 to act in a very similar fashion. I expect 13 to act in a similar fashion. Really, I expect each round number to act in likely a similar fashion up until we get maybe above $15 a share, maybe $20 a share. That's when you start looking at perhaps the even round numbers. You get a little higher, then you start looking at every 5. But when a stock is in the lower price range, like Rivian is currently, each round number is a really big psychological level. So I'll go ahead and draw those. And I think we're going to see a lot of decision making being made around those, which they begin to act like checkpoints. So if you're a bear, break downside of 11 and a hold, there's kind of like a short-term checkpoint. Down 1055, that's a technical level turning into a psychological level, checkpoint, right? 10, huge checkpoint if you're a bear. Each one of those levels is a potential area of support if you're a bull, upside bulls, right? 11, holding on to that is kind of like a check, right? 12 is certainly a checkpoint. 13, certainly a checkpoint. And the idea throughout April is really to claim as many checkpoints as is within reason, I suppose, as possible, without the stock being overextended in either direction, really, where the other side is able to look at it overwhelmingly so and say, listen, we're going to take a contrarian view, or even some of your peers start taking the other side, taking that contrarian view because it makes too much sense not to. What's something that can perhaps help avoid that? Well, you go back to like the 4-hour chart. If Rivian continues, let's say Rivian claims $12 a share, for example, okay, and then starts pulling higher toward 12.50, 13. Just an example. And then that 50 period starts to curl upside and stays underneath the move and stays close. That's a psychological barrier. What you don't want is a stock that's trading on thin air, so to speak. Okay, because from a bullish perspective, if you want to look at it that way, it's just a little easier, I think, to look at it from a bullish perspective, to wrap your head around that. A lot of bears come in, and if there's no psychological barrier close to the downside, you have a lot of contrarian viewpoints coming in saying, listen, this thing's due for a pullback. It's floating on thin air. I'm going to position myself short and take that bet. You want to put as much doubt into those participants' minds as possible. You do that with psychological barriers. Okay, now earnings. Okay, we don't have earnings until May 7th, so nothing to worry about in terms of earnings through April, though, you know, at the end of that first week in May is when we'll start looking at movement heading into that report. Implied volatility here on Rivian, which starts opening up the conversation into the options talk, okay, is currently, compared to the last like 6 months or so, it's in the mid-range. Okay, in the last month and a half or so, it's actually quite low. So it's low compared to this area, right? Here's kind of like the secret to implied volatility. Vega, which is the Greek that influences the pricing of the options, so you better understand that it's very important to do so. The secret to this is time frame context. If you're buying contracts that don't expire until 18 months out, you don't really care what the IV is sitting at in comparison to the last 3 weeks. You want to look at the last 2 to 3 years. In the same way, if you're buying contracts that expire in a week and a half, you don't care if IV is low compared to the last 3 years. You care where IV sits compared to the last 1 to 2 months, right? Because that equilibrium shifts based on the time frame you're comparing to. Very, very important. So just understand that as IV is coming down, okay, the lower IV goes, the more favorable conditions become for new options buyers, and the higher IV goes, again, in comparison to your intended trade time frame, the higher the risk of potential IV crush. All right. Now, I want to look at bias from the chain, but really quickly, let's do a volume profile analysis here on the weekly chart. All right, and we can see here that throughout, really, this is where 2024 started right there, so we're looking at a couple of years. It's actually rather interesting. To start 2024, we had, well, including the last week of 23, we had that 5-week-long streak of red. Okay. Now, since then, the stock is down from $15 to the mid-11s, at least as of this recording. But during that time, all right, we've seen 6 green weeks and 2 red weeks. However, it just so happened that the week of earnings, we saw that big drop. The volume on that week was about 400 million shares. And a few weeks ago, we saw about a 370 million share week on a slightly smaller green candle. So what's interesting about doing a longer term, like a weekly chart volume profile analysis, is a lot of bears would likely look at the price action and just assume that there's been this massive bearish bias really since the end of January. And that's really not true. We've actually seen, I would say relatively unbiased, if not perhaps leaning a little bit more bullish. I mean, you're talking 6 out of 8 weeks have been green. It just so happened that one earnings week, you saw just barely the highest volume that week, and it happened to be deep red. And a lot of that volume was likely selling volume considering the size of that candle. Okay, whereas on this green bar, you likely had more of a mix of the two. You have a wick, right, on that weekly candle, and you have almost equivalent volume with less movement. So that might have been more of a battle. Okay, however, I would not go out of the, I wouldn't go as far as saying that we've seen such heavy bearish bias in the volume profile in the last 8 weeks, because we really haven't at all, which I think is very interesting. All right, now let's take a look at the bias out of the options traders. All right, now if we take a look at this is the put-call ratio, which is that blue line, in comparison to the actual price of the stock. Now, understand that 1.0 is an equal amount of open interest for calls and puts. 1.0 is right where my cursor is, right here. Okay, just the cursor, not the crosshairs. When that goes above 1.0, you're actually seeing a bit of put side bias in terms of open interest. So Rivian currently sits at 1.07, which means as far as open interest is concerned, there's actually a slight put side bias. It's not extreme. Okay, I've seen recently some stocks that had a 0.6, a 0.7, okay, 0.6, 0.7. That's a rather heavy call side bias, 0.5. So understand that 1.07 is not an incredibly heavy put side bias, but there's certainly some put side bias there, again, at least in terms of open interest. But we also have to consider that, giving that more recent, I should say, downside earnings move that we saw, it's not incredibly uncommon to see something like that. All right. Now, the expected move. All right, we can actually get the expected move out of the options chain. This is a technical term. It's priced by utilizing the implied volatility of contracts at a certain expiration. So if we look at the 26th of April of 24, that's the last expiration in April. We look over here, the expected move is $2 plus or minus $2.66. And that's from the time of this recording to the end of April. Okay. So basically what the options traders are saying, let's go back to the daily chart here and then zoom in a little bit. The options traders are saying that by the end of April, they think that the stock price is going to be either, actually we have to do this a little bit, is going to be either approximately 870, okay, or as high as about a little over 14 bucks a share. Now that's a pretty big range. Now understand that by, design, expected move does not have a directional bias. It has a volatility bias, which helps us as a factor since everything we just looked at was looking at directional bias, right? So that helps us throw another factor into the bucket and then make our own decision. Now it's worth considering that upside, if that expected move were to be the upside, that's getting close to that 50-day moving average on the daily chart, which is a big deal. And both of those expected moves by the end of April put us outside of all of these channels we have drawn, okay? Now, two things to think about here. If you're somebody that looks at that range, that expected move in either direction, and you're like, man, I don't think we're going to move that much by the end of April. Well, then you're someone who might look at like, okay, maybe I want to look at some iron condors or something to that degree, something to that effect. An option strategy that capitalizes on realized volatility being less than expected volatility or implied volatility. But if you're somebody who's looking at that and you're like, man, I think we're going to move a lot more than, $2.60, $2.70 by the end of April. Okay, well, then you're likely in the boat where you want to look at potentially purchasing contracts since your volatility expectation is higher than the markets, and purchased contracts benefit, of course, assuming you're directionally correct, benefits from actual volatility being higher than expected volatility through Vega pump, right? At least that assumes that the implied volatility, rises with that that realized volatility ending up higher. You always want to look for where you disagree with the market pricing, okay? And that doesn't just mean the price of the stock, right? That means all the Greeks as well and the options, and then position yourself to try to capitalize on your disagreement. Listen, if your goal is to try to expedite the process of either going part-time, maybe even full-time as a trader, we've had a number of members actually pull that off. I highly encourage you to check out the Roensch Capital Gold server. I'm in there every day working with the group, sending out my personal scalp setup alerts, my personal swing trade setup alerts as they come along, in-play stock alerts for quick micro scalpers, human verified unusual options activity, and finally, Platinum one-on-one, my small group that I work with one-on-one individually. That link in the pinned comment, that'll allow you to get grandfathered in at the current rate so you're immune to future price raises for as long as you retain your membership. Listen, I hope to see you join. If you did get value out of this video, please subscribe to the channel. I appreciate it, and I'll see you in the next one.